Welcome back. Absolutely flat on the benchmark indices. The mid-caps are up just slightly, a smidge, a fractional of a gain of close to about 0.3%. The big winner in the Asian markets today is Hang Seng, which has rallied close to about 2.5%. So optimism about China reopening, the recovery there continues to fuel up the market of Hang Seng. But let's talk about Berger Paints, because crude prices have seen a very big slide. In fact, the peak level in Brent crude prices was about $140, and now it's come, practically halved. As we speak, we're at $77, $78 per barrel, flat on a year-to-date basis, the lowest level that we've seen nearly all year. Now, this should be positive for a company like Berger Paints. In fact, when they came out with their Q2 numbers, they had indicated that softening raw material prices should aid profitability in Q3 as well as Q4. What could those numbers look like? Abhijit Roy, Managing Director and the CEO at Berger Paints, is now with us. Mr. Roy, morning. Rima here. That's the question, right? Your gross margins were about 35.5% in Q2. Has the decline in crude prices been far more than what you anticipated? Is this going to provide a much bigger tailwind than what you were anticipating? And what could the number look like on gross margins? How much can you push it up to as things currently stand?
So it was anticipated, this is what I had indicated also in the Q2 results scenario, that, prices are softening a little bit. The effect comes with a lag, so it's not that in the Q3 itself, it will be visible so much. Probably in much more in Q4, almost the entire thing will come in, the effect will come in Q4. So the Q4 margins will move upwards considerably. In Q3, there will be a marginal improvement because July, August raw materials are now getting, converted and sold in this period. So that was the peak period. So you will not see the impact so much in the Q3. Probably in the month of December will have that impact. And then going forward, the Q4, you will see a much higher impact.
In Q4, sir, can you inch up gross margins closer to 40%?
Well, no, difficult to say whether it will go up to 40% or not, but it will definitely be ahead of 38, 39. So that's about approximately where we would be.
Mr. Roy, last time you were on, you'd said gross margin improvement of between 2 and 2.5% in H2. So that's broadly how we should look at it, right?
It should be. It should be happening that way, around that margin that we had talked about.
What's the sensitivity, though? I mean, because oil prices overall are falling very sharply. I mean, even in the last week, prices are down almost, 8-9%. If prices stay here, what's the sensitivity to margins for you?
So, Prashant, it's a volatile market. It keeps changing. You've seen it going down. Sometimes it goes up. Some announcement, OPEC Plus will come and say that we are cutting, production, and then again the prices go up. So it's difficult to predict that way. But, if it remains at these levels, obviously it will improve the margin further in the Q4 and going forward into Q1 of next year as well. So that's what is going to happen. However, it needs to be seen whether these prices remain at these levels or not.
Okay, all right. Hi, Vijay, morning. What about demand? I think you were indicating that volume growth in the second half of the year could be in double digits. Is demand strong enough? Could you tell us what kind of a volume growth are you looking at? And pricing is important, not from a share market perspective, also from a customer point. Have you increased prices in Q3?
So no more price increases that we have taken. As far as demand is concerned, October was a little bit lukewarm, in the sense that, the rains continued right up to the 15th or the 16th. So we did grow, but not at the pace at which we would have loved to grow. November was better, we had a double digit, and so therefore in value terms, the volume value gap has decreased actually in this period because last year we had taken all the price increases by October, November. So, therefore now the gap is nothing, almost, negligible. And hence, whatever is the volume growth, 1 or 2% will be the enhanced value growth. So this quarter, the bases were much high because of the price increases. The monsoons have impacted. So it will be relatively soft in terms of the growth that we have been seeing so far in the industry. Overall, however, we think that we should be able to gain a little bit of market share.
Okay. Sir, I'm reading a report which has come out from a brokerage where they've done some channel checks, and they're saying that Akzo and Kansai are playing catch up with leaders in aggression. In new projects, Akzo and Kansai are getting more aggressive. Akzo doing better than earlier on a case-to-case basis and in B2B deals. And overall, the wait-and-watch period in terms of product launches compared to leaders like Asian Paints is also coming down. I know you indicated that your market share has improved, but are you seeing increased aggression from some companies which are perhaps smaller than you in size?
Well, paint has been a competitive industry. Everyone tries, the level best because market share, they have been losing, a little bit of market share in the past. And so I presume that they should, be looking at, restoring that back. The project segment that they're talking about is a very small segment of the overall paint industry, and the decorative paint category, so it's only about 15 odd percentage. So that's not going to make tangible difference in the overall scheme of things. We are, as I said, I think we should be growing faster than the industry, and that's what our objective is. Difficult to comment on what competitors are doing, but the results will show at the end of the day what happens.
Okay. You mentioned market share a couple of times, Mr. Roy. What is your market share and where is it headed?
It's about 18.8, as of now, looking at, pushing it upwards more towards 20% in the, next 1 or 2 years, maybe. If we can do that, that will be good.
Okay. Sir, in Q2, you said that the rural market slowed, especially in north and central regions. Has that reversed? Are you seeing a pickup in rural markets? And how much does it contribute to your overall revenues or volumes?
So there has been marginal improvement there, not substantial, but there is an improvement there in the sentiments and as well as the demand. But it's gradually improving. So I hope that, and I think that it should improve further going forward. Well, it contributes a significant portion. So any improvement there will help us.
How much does it contribute, sir? And what is the extent of improvement? Just to gauge what's happening, because this is also a barometer for what's happening in the rural economy.
Well, we don't measure it the way FMCGs measure as rural. What we do is, all our warehouses, the depot towns, we call them, we treat them as urban and the rest are called as rural as far as we are concerned. So it's not actual rural the way it is perceived to be. But we see an improvement there happening. To what extent is the improvement? Well, I would say as of now, green shoots of improvement are there visible. I don't think, massive improvement has happened. But it was, like it was going down, now that has turned and it is improving a little bit, is what we have seen so far.
Okay, all right. Final question then, Mr. Roy. You all were increasing capacity, I believe. One of your facilities were to get operational. Could you tell us, has that gone live or when does it go live? And, how do you see the ramp up out there?
So that will go live, it's near Lucknow, mid-January we are going live. The, finishing touches, everything else is happening. All the permissions are coming in. There are 1 or 2 still left before we can kickstart the operation. But we are reasonably certain that mid-January we should be able to start off the Lucknow plant.
All right, Mr. Roy, we'll leave it there. Thank you very much for your time. Great speaking with you. Appreciate it, as always, your thoughts and interactions. I mean, oil, of course, is the big one. It's volatile, as they said, but it also holds potential if it stays lower for longer.
Just one point. I was reading a Edelweiss report now called Nuvama, sorry. They were anticipating that margins should improve to 37-38% gross margins. What the management told us is that gross margins could be ahead of 38-39%. So clearly, as things currently stand, the margin expansion is more than what the market was anticipating perhaps just a month back when the numbers came out.
Possibly.
So just, comparing it with the estimates when the numbers came out exactly a month back.
Possibly, Rima. I mean, of course, what flows down from there, gross margin level to the net level, a lot depends on, as you said, competitive intensity, how much advertising they have to do, etc., etc. But we'll see. That's Berger for you at about 625. Now, NCC is the next one which is on our radar. The company's backed 2 new orders in the month of November. Overall execution, of course, has been picking up. It picked up quite a bit in the first half. And the company raised their full-year revenue guidance to 30% compared to 15 to 20% earlier. It also expects EBITDA margin of 10%. Vijay Kumar is Head and Vice Chairman Finance at NCC. He's joining us to take some questions. Mr. Kumar, great to have you with us here. Good morning. Thanks very much. Prashant this side. The fact that you're starting to guide again is always good news. You see more confidence, more clarity in terms of how things are proceeding. Can you tell us on the ground how has execution been like this quarter so far? 2 months done, we're in the 3rd month of the quarter, and are you comfortable with what you've guided to the market in terms of revenue growth?
You see, we have registered an execution level of 6,000 crores in H1. This is virtually 46% higher than what it is. And we have good order book position also, as at the end of the H1, we have 40,000 crores. So I think looking to the order book position and the execution levels, what we are at now, the pace is expected to continue. Though I will not be able to share with you a specific guiding number, but then the pace, I can say that the pace is expected to continue.
Mr. Kumar, what is the order book as of today? Because in the month of November also you all won some orders, I think close to about 376 crore, plus you would have executed some. So what would the net order book stand at, which compares with 4,000 as of 30th September?
We have, as in September, we have bagged something like 6,800 crores of orders, which is 30% higher than what it is compared to previous year. Besides, we have ordered certain big orders, especially in water and electric segment. Water, we got some order, 456 crores from Odisha state, and another 600 crores, around 600 crores in Gujarat state, again, lift irrigation project. And we have got from KPTCL, which is Karnataka, for 320 crores and all that. So that takes us to something close to 8,300 crores as and date when we speak.
Well, what is that number, sir? Or the total order book that you just said?
Not the total order book position will be like 41,000 crores, around that. And the 8,300 crores is the fresh orders what we have bagged during this half one plus last 2 months.
8,300 crore.
The 8,300.
8,300 crores is the fresh orders, order inflow, that is.
Order inflow, right.
Okay, all right. Mr. Kumar, let's keep the orders and the execution aside for the time being. I want to focus solely on receivables. Could you tell us what is the total receivables as of now? How much of it is from AP? Could you break that up for us? I have a couple of questions on receivables, so we could get going.
Right now, we have 2,700 crores of receivables on book. Out of this, something around 500 to 550 crores from AP itself. So the total receivables number of days, if you see, it is something around 90 to 95 days. So that is what it is. What's your next question?
Total consolidated receivables is 2,700 crores, the consolidated entity?
Correct, exactly.
And out of that, 550 crores is from Andhra Pradesh?
Correct.
When do you expect to realize these receivables? I mean, out of this 2,700 crores, you've been guiding that it comes down, right? So if you could run us through how much has it come down by and by when?
See, it was 2 years back, we were talking about 1,500 crores of receivables from AP. Now it has come down substantially to 550 crores, which is quite significant. And of course, we have received another 200. We have received 200 crores in the last H1. So the pace is the receivables collection is happening, but then it is happening at a slow pace. Possibly it may take another year or year and a half to clear the entire use for this.
This is all legacy, right, Mr. Kumar? For newer work that you're executing, are there delays? Is the pace of payment now up to the mark?
It's basically legacy.
Okay.
It's a baggage what we are carrying from the past.
Can you break it up, the 2,700 crores? How much of it is legacy?
It is up to approximately like 550 crores, as I said.
Okay, that is AP, that is legacy, and you're expecting that portion to get realized in the next 12 to around 18 months. Are we getting that correct?
Yes.
Okay, all right. So we have got that out of the way then. I want to focus on a couple of your other assets that you have sold and you're due to receive money. One such asset is that Vizag land sale, right? Could you tell us, have you received the money? And post-taxation, what is the money that comes in your hand?
See, we have monetized the Vizag land.
Yes.
Which is like 200 crores of equity investment towards equity investment, another 320 crores towards repayment of loan investment plus interest. See, already we have received 50 crores. Another 50 crores is due. Another 50 crores we'll expect before this December. I think before March we should expect another 100 crores as per the terms of the agreement. And if you see post-tax, it will be, we have already accounted for it. Post-tax, it will be like 150 crores.
Okay.
Right? And besides, we are supposed to get the repayment of repayment of our loans to the Vizag Urban Company, which is 320 crores plus interest. This is to be receivable by FY24.
Just to, Mr. Kumar, finish that point on the receivables. So, excluding Andhra, which you said is legacy, the receivables are about 2,200 crores or so, right?
Pardon?
The receivables excluding from the state of Andhra Pradesh is about 2,200 crores, right?
Correct.
So that is not that is current outstanding, and you said the cycle is 90 to 95 days for that.
I'm including the cycle is 90 to 95 days. That is including your AP receivables. Suppose I don't factor in AP receivables.
Yeah.
Then it will be much lesser. It will be like around two months or something.
Okay. And you're saying things are improving. Could you tell us if debt will go up from here to the end of the year beyond? I mean, what's the trajectory going to be? What is a gross and net debt add, and what's the trajectory for that?
See, our working capital turnover is increasing every year, if you observe. With that, the debt also will go down. If you compare with the last year's same time figure, it is 2,100 crores, which we have brought it down to 1,985 crores at the end of September 2022. So this is a reduction of 220 crores itself. And going forward, we have a strong conviction that we will be able to reduce it further as the working capital turnover ratio will keep increasing as the monetization of Vizag asset also comes in. So the net debt will further come down.
So what could the debt come down to from the current level of 1,980 crore?
Last year it was 2,100 crores. It has come down to 1,985 crores.
Correct. But I'm saying by year end, how much?
We are talking as at the end of September 2022 and September 2021.
No, correct, sir. But I'm asking by March 2023, 2 quarters hence, because you will be getting that Vizag money in as well, post that monetization. So how much can you bring down the debt to? Can it come down to, say, 1,500 crores, 1,600 crores? Is there any visibility on the number?
I think, yeah, we can guess around that number, but, as I said, we need to work out specific numbers and guidance factor as such. Okay. So, however, I think we are confident about that.
Okay, all right. And just to clarify, the Vizag sale, you had given us the breakup, 50 crores you will receive in December, you'll receive some more money in March. The total quantum of that Vizag land post-tax is how much?
Up to this year, it is 150, 160 crores.
No, the total, not this year. The total, sir. The total you'll receive.
So total will be pre-tax. Let me tell you first pre-tax figures. 520 plus interest, certain interest amount like another 30 crores if you include like 550 crores. 550 crores you can reduce 25% of that.
25%. Okay, so you'll roughly get around 400 crores post-tax with regard to this Vizag sale.
Yeah, you can safely assume that.
And out of that 400 crores, around 160 crores you'll get in this fiscal itself.
In this financial year itself, 150 crores.
Okay, and also the other asset you had is that SEPCOP, right? You all had a venture that you were looking at with regard to the power unit. And you're also supposed to receive some money from them as well. What is that amount?
Still that is in the arbitration stage.
Oh.
So that is in the arbitration stage. That these proceedings will conclude by March end. I think let us see. We are positive about it. Before March, we should be able to say something.
All right, there's a long pending litigation. Thank you very much, Mr. Kumar. Appreciate you joining in. Great conversation. That's a new listing as well. That is Dharmaj Crop Guard, and that's the bell ringing ceremony. We've got the listing, which is expected to be strong, 15% higher at about 272. That's a 35 rupee pop coming in. It's a pretty good listing. And those are shots coming in. The management team, the family, everyone there ringing the bell and welcoming Dharmaj into the listed universe. We'll have more on this with the management a little later. Look at the market though as well. We're up 50 points. I mean, so the initial hesitation is all but gone, and the market's shouldn't call it surging, but it is up in a decent way. 18,615. It's moved up to the high point of the day as we speak. Where are the gains coming from? If you can have ICICI Bank up, that's adding about 14, 15 index points. There is Axis Bank. Axis Bank surged in the last hour yesterday as well. That's about 7 index points from Axis. L&T is adding about 6 index points, and you've got Reliance and HDFC Bank as well. A lot of it is to do with banks. ICICI, Axis, HDFC Bank are the 3 names I can spot, along with L&T and Reliance Industries as well. So this is a good-looking screen now on the Nifty as well in today's session. So the low, we of course did not get anywhere close to the 20-day, and the market's kind of taken off much before that. The low today is what, 18,536. So still about 70 points away between where the low today was on the 20-day in the morning session. This is still early days, just 45 minutes of the trading behind us, but it's looking good. Market breadth overall is also good. Advances to declines ratio is 2:1. So lots happening in the broader market as well. Mitesh is with us for a quick check on things. Mitesh, I mean, it's the dip's been bought, the very small dip that we saw earlier on. What would you do?
For sure, I think, that's a good sign that we didn't even go down to the 20-day average. But again, as I said, I think there's still time for us to turn positive and look at a new high, and the market's getting into the sequence of making higher highs. I think for the time being, trade with long bias. I have 2 stocks which are on the buy side. Chola Finance is something which is breaking out nicely on the hourly and the 2-hourly charts. So recommend a buy here. Keep a stop below levels of 735 and a target of around 770 on the upside can be looked at. The other one which I like is Birlasoft. It's done a correction for the last 3-4 days. Now bouncing back from its 10-day average. That's a buy with a stop just below days low of 314 half and a target of around 332 on the upside can be looked at.
Mitesh, thank you very much for joining in. The biggest gainers for the week and today outside of the index continue to be mid-cap banks as well as fertilizer. So Bank of India, 4.5% up today for the week so far. So that's in the first 4 days, it's up close to about 15%. Central Bank of India up 3% today. For the week so far, it's up close to about 13.5%, right? And there are other gainers like J&K Bank, 22% up this week. Punjab and Sindh is up 25% this week. And the other pocket are the fertilizer names. So FACT, 4.5% for the day, 16% up for the week. So these are the 2 pockets where you've seen buying. Get into a break. Up next, Manisha will be joining in for a commodity market check.
Equity markets are doing okay, so let's turn our attention to the commodity markets. Manisha Gupta standing by as always to tell us what's going on there. Manisha.
Thank you so much for that, Nigel. Well, I'm looking at the crude oil prices where after 5 days of decline, we're looking at some respite consolidation coming in for the prices. Remember, for the month of November, we saw a decline of nearly 7% for the crude prices. December as well has started on a weak note here. If you look at the fundamentals, well, that continued to weigh onto the markets. We are trading at an 11-month lows right now. So these are the prices that we saw in December 2021. And these are the prices that were before the Russia-Ukraine war actually began. Manufacturing activity numbers have continued to be on the weaker side from US and Europe. That continues continues to weigh onto the prices. And it's not just crude. There is a decline that we have seen across petroleum products as well. The U.S. inventories, while have seen a decline of 5.2 million barrels per day, and this is a second week of decline into the markets, is the reason you have seen some buying coming in. But there has been a build-up when you look at the gasoline and heating oil and natural gas inventories. There is the reason you're looking at gasoline prices now trading at a one-year lows. Heating oil prices have continued to decline. That one is trading at a three-month lows as well. I also want to put on a picture on how the crude varieties have traded in this year until now. This is the high and the low for major crude varieties. While, of course, we talk about Brent and WTI, I'm talking about Russian Urals right now because we have a price cap at $60 per barrel there. But we have seen prices trade at $53 a barrel. The high of this year was in March at 111. So that is the case with all the varieties. We are nearly half of where we were on the higher point of 2022. So we nearly are closing this year in the negative when it comes to the crude prices there. This is what we've done on a month-on-month and an year-on-year basis. Still 20 days to go, so those figures clearly will change. But in last 1 month, as you can see, we have seen a decline across crude and varieties. It's only coal which is trading in the positive on month-on-month and year-on-year basis. On a year-on-year basis, we still are on the positive side when it comes to the crude products there. But the markets continue to watch out for the kind of demand that we will especially come in from China. This is the data that tells you on where the global oil supply stands right now. So 99.9 million barrels per day is this year, and the expectation of slight jump there at 100.7 million barrels per day. This perhaps is going to be on the weaker side of growth numbers when we look at the supply there. Demand also not too much of a change there as well. 99.82 is where we perhaps will close this year. Slight increase of nearly at 100.82 million barrels per day is what we are looking at the next year. So it's going to be quite a bit of a balance as the markets are anticipating for the next year there. This is what the US will do, and the markets will keep a keen eye onto this one as well. So while this year there has been an increase and up to 11.87 million barrels, next year is going to be even higher at 12.34. So that means that that is the kind of oil and gas that you might see coming in from Europe as well. But the major important number clearly is the price trajectory that you might see in 2023. EIA and Fitch actually have a lower side of expectation on crude oil prices, anywhere between 92 to 95. Wood Mackenzie also talking about 95. And, well, three-digit is back. Bank of America expects $110 a barrel in the next year. And that's exactly the kind of numbers we've seen come in from Goldman Sachs and Enverus Intelligence. They're also expecting 100 and 110 of an average for Brent prices to come back in next year.
All right, Manisha, thanks very much for that. Commodities and focus oil in particular. PSU banks are buzzing in trade once again. Well, that seems like a repetitive headline because, well, that's what they've been doing last many days. Nimesh highlighted them in a standout brokerage report. Let's revisit this with him. Nimesh, hi.
Hi, Prashant. As you rightly pointed out, the entire PSU bank basket is buzzing again in trade today. And, the upgrades have started pouring in now. So today, Credit Suisse has gone ahead and upgraded Bank of India to an outperform from underperform. And they've raised the target price there to 105 versus 42 earlier. They've also increased the EPS estimates by 5 to 20% on Bank of India. Now, Credit Suisse says that Bank of India has been seeing an improvement in profitability with PPOP ROA up to 1.7% now. Even the NIMs have improved quarter on quarter and are up 40 basis points. And they see further improvement in NIMs by FY24 by more than 50 basis points compared to FY22. Even the ROEs have improved to 10%, and the stock is still trading at less than 0.7 times FY24 estimated price to book. So the valuations are comfortable, and hence a big upgrade on Bank of India. They've also raised the target price in a couple of other PSU banks, which includes State Bank of India. There they've raised the target price to 730, and on Bank of Baroda they've raised the target price to 220. So after Morgan Stanley, even Credit Suisse has now raised EPS estimates and target prices on PSU banks. And today they've upgraded Bank of India to outperform with a target price of 105.
Thank you very much for that. And the big winner for the day is Eicher Motors, the top Nifty gainer. This is as the company has commenced operations at a new facility in Brazil, which would be the company's fourth outside of India. Brazil, according to the company, is a very strong market for them. It's soon poised to be the single largest market for Royal Enfield outside of India. And Brazil has seen a growth of nearly 100% since 2019. Eicher Motors up 1.5%, the top Nifty gainer. Get into a break, but don't go anywhere because on the other side, we have a very special and exclusive interaction. Lata will connect with Ramdev Agarwal of Motilal Oswal Financial Services.